and welcome to the Asset Preservation Hour. My name is Cynthia DeFazio, and I'm joined today by Stewart Willis. He is president of Asset Preservation Wealth and Tax in Arizona, as well as Spengel, radio host, TV host, and live events.
Well, thank you. I thank you, Cynthia, for letting me come. How you doing, Stewart?
Don't make me put you back in the radio box.
Okay, all right. I'll behave. We do the weekly radio show together here on KTAR and AM 550. 1 hour of radio. We've got the half-hour show. Thank you, guys. I won't take up a lot of time because we've got a lot we're going to cover today.
Well, we do, and it's going to be an amazing show. I love how much energy we have in the studio right now. It's fantastic. But wow, Stewart, a great show talking about how to create a real tax plan, Social Security taxes, the 3 stages of retirement planning. So obviously, Stewart, I want to talk to you a little bit about this right now. The audience has obviously watched the Asset Preservation Hour, and they know that you focus a lot on tax, if you will. But now that tax season is over, what should people think about now that
Wait. Do we want to be talking about taxes now? Look,
sorry.
The bags are finally leaving from underneath his eyes. He's getting some sleep late. Seriously, Stewart, is now the time to be thinking about taxes? We just closed that door behind us.
You know what? For someone who didn't spend a day in our tax office, you are still.
No, I did not.
I think you just realized
you do not want Spengel on your taxes.
No,
look,
Cynthia DeFazio.
I think most people know that I have a tax office in our Scottsdale, in our West Valley offices here in Arizona. And the purpose of it is not just tax prep, right? It's not meant to be a profit center. It's meant to be able to, get a real understanding of our clients' tax situations. And it's a ton of work. And, when my friends see my schedule, other financial advisors, they look at me like I'm crazy, right? These are guys that work, they're on the golf course 3 days a week. And, I'm here working 7 days a week. And do I add a lot of additional work for myself? Yes. But you know what? The level of planning, in my opinion, is so much better when you have access to tax information. It creates real planning. And I think that the end result is dramatically better.
And I think it's huge for you, the difference between. So can you tell us a little bit then about the difference between taxable income and the adjusted gross income? I mean, it's different. It becomes jargon for some of us out there, but it's really important with the investment strategy.
Well, it is, and I think it's important, the fact that we focus on tax, I will get to those definitions. I think it's really important to understand that, that our message has been carrying here in Arizona. It's funny because we've had a couple advisors that have left a competing firm here, great guy by the name of Eric Jimenez, that's in charge of our Scottsdale office. We've got Scott Preble now at our West Valley, along with Dan Murphy and Ernie Belargin in our Tempe office here. But these guys are some top advisors, or were top advisors at other firms. But they came to us saying, hey, you know what? We want to do real planning and real tax planning, and they just weren't able to, right? Because, I think our message has forced other advisors to talk tax, and they're just out of their lane, right? They're just not comfortable. And look, there gets to be a point where I just say, whoa, that's not me. Talk to our CPAs, talk to our enrolled agents, and, not just because I don't want to talk about tax, but because we have tax professionals year-round that work for us that can answer those questions. And, I always jokingly say I feel like for the first decade of my career, I was faking it because I didn't understand tax. But I think this year we're going to do about 1,000 tax returns, which is a lot of work, a lot of headache. I get yelled at every once in a while because people are nervous we're not going to make it. And I think we only had to do 15 extensions, but, out of...
There's also some surprises, though, because we talked about this a lot during the radio, and I came to a lot of your live events. That Broadway theater is fantastic. You're going to be doing it all around Arizona. But trying to get people some tax-free income and how you actually do that with the return. But we talked a lot about the Roth conversion challenge. Are there surprises when people are getting their tax returns from you recently?
Well, absolutely. And I think the surprises sometimes are good and sometimes bad, right? Generally, I'm very critical during our tax delivery stage when we're delivering the tax returns, because I'm a perfectionist. I want to make sure we're taking advantage of every dollar within a bracket to make sure we don't leave any free money on the table, etc. But you know what? When it comes to talking about taxes, yes, the easy thing is for me to move on, to stop talking about it because I'm tired of tax because we just got done with it, right?
Right.
But here's the thing. It's kind of like a New Year's resolution. I think people get energized, fired up as soon as New Year's come. The gym is full.
Yeah.
Right. The parking lot is a
That's
pain
true.
because you can't get in.
Yeah.
It's the same thing with financial planning. We talked about, one of our biggest shows here in Arizona was our New Year's Eve, or right after New Year's plan, where we talk about, hey, make your New Year's resolution to take action. And guess what? People did. They responded in overwhelming numbers. They bombarded us with phone calls. Well, I think now as we enter into the summer months, people start, getting that summer lull where they're too tired, they're too hot. At least my mom complains about the heat here in Arizona. We moved her out from California, from La Jolla, and now she's in Arizona in the summer.
Better taxes here, though.
True story.
True.
But I think it's time to re-energize, to really refocus, to say, you know what? Yes, I personally am tired about it, but you know what? I know it benefits our clients dramatically when it comes to tax planning. So there's a few things we should talk about. Okay. Number one, a few things I think people, need to focus on that, are misunderstood. Oftentimes people are focused on adjusted gross income, how much income they have before deductions.
Yeah.
Well, what I focus on is taxable income. And what your taxable income is, it's your adjusted gross income minus either your standard deduction or your itemized deductions, right? That's the amount that you actually pay tax on. Well, the important thing there is to make sure that that is the number that changes your brackets and so forth, right? And the reason I look at that number, once again, I want to take advantage of every dollar within these brackets. And one way we do that with tax planning is by, realizing capital gains, maybe Roth conversions, maybe even withdrawals. When people say, hey, I'll just take money out of my checking account and deplete that, well, that may not be the right thing. Maybe we refresh it out of your IRA.
That's their cash account. I mean, that's their safety account.
Safe money,
Do we want to deplete your liquidity?
Yeah.
Yeah, not in all cases. I mean, we want to make sure that people have enough access to income. And I think the proper source of income is a dramatically important thing when it comes to retirement planning.
I have to ask you, Stewart, what did you learn during this tax season?
Yeah, what I learned during tax season here was that I could work 15 hours a day, 7 days a week, and still complain and no one cares.
Skid into the radio studio, skid into the TV studio. You're in the office all the time.
I learned that I need a good makeup person to fix my bags under my eyes.
Financial takeaways. Or what do you think people were seeing in the returns, or what was different this year?
Well, you know what? I think a lot of people took advantage of our Roth conversion challenge. And many of them, we actually suggested that we not withhold taxes. Because remember, when you withhold taxes, you still have to pay tax on that withholding amount too. So it's kind of a weird double tax. But we would pay it either with a quarterly payment or during the tax year here. And so when people see a big tax bill, a lot of people just mistakenly judge their tax return by how much they owe or how much they're getting back.
Yeah.
Right. And is that the right way to go about it? To walk in the tax office and say, I want a big, huge return next year?
I think it's a tremendous mistake because, look, I could be a hero to everybody. When they're taking the RMDs, I could just withhold 35% out of their distribution. They come in and we're celebrating their big return. But that doesn't help them, right? Yeah. And so, yes, one of the things we learned is that some people go into shock when they owe a lot of money on taxes.
That's true.
Even if it's part of a plan. So I think, look, we communicate well, but sometimes when people are writing checks that they've never written before, it's a hard thing to do. But what I see more than anything, especially with new clients, is that they're not taking advantage of their brackets. They're not planning. They're not using it. I'll use an example. One of my kids' basketball coaches and trainers. He teaches at a local high school. He's got 3 kids, so he's got all of those different dependents here, has tons of deductions and child tax credits. Well, he's putting away money into his 403B. Well, a 403B is just like a 401k, but it's for nonprofits, for hospitals and schools. And what he's doing, he's putting away all this money tax deferred. But he doesn't pay taxes because of all these tax deductions, right?
Okay.
So why the heck would you deduct or to put money away tax deferred when you're paying no taxes?
It's 40s or 50s, and he's just kicking that can down the road.
So what I'm seeing is that people just don't have a plan, right? And they need to think about taxes.
Yeah.
And if you're concerned that your financial advisor isn't talking to your tax advisor, or your tax advisor is not talking to your financial advisor, and you just feel like they're disjointed there. Well, it's oftentimes because these financial advisors aren't allowed to talk about tax. And if you're concerned that your taxes are being overlooked in your financial plan, what we're offering is a complimentary financial portfolio review and tax analysis. What we'll do is we'll take a look at what kind of risk you're taking inside your portfolio, what kind of hidden fees are inside your portfolio, and what kind of tax time bomb have you built for yourself going into retirement. If you have concerns, feel free to reach out. We're glad to give you that second opinion at 833-652-7829, or click on that QR code that's right on your screen. It'll take you to assetpreservation.com. That's our website. It'll take you there. Sign up for a complimentary portfolio review. Only available this week for the first 10 callers or 10 people to click on that card. We'd be glad to help, but you have to take action.
Stewart, thank you so much. And Spike, thank you so much.
My pleasure.
To our viewers at home, that number to call is on your screen, 833-652-7829. We know you have a lot of questions for Stewart about how to plan your perfect retirement, how to plan for taxes, how to plan Social Security. He has the answers for you. Or if you have your smartphone, go ahead, grab it, click on the QR code at the bottom corner of your screen. That will take you right to Stewart's landing page. We're going to take a very short commercial break here on the Asset Preservation Hour, but don't go anywhere. When we come back, we're going to talk a little bit about taxes and Social Security and the correlation between the two. Stay tuned.
We know the market is going to get worse from here. This is the biggest monthly decline in 10 years. People's 401ks took a major hit.
Well, my investments are tanking. My retirement isn't going as planned. I can't believe I let my kid talk me into buying crypto. I mean, what is that anyway?
This was the fourth worst contraction in history.
So how are you two doing?
Your financial future doesn't have to be uncertain. I'm Stewart Willis with Asset Preservation Wealth and Tax. If you have amassed a nest egg, it's time for a financial advisor to help you reach your retirement goals. We are in one of the greatest tax windows in history, so it makes sense to take advantage of this tax discount while you can with your partners in retirement. All of our expert advisors, CPAs, and enrolled agents are fiduciaries that specialize in retirement planning, tax mitigation, estate planning, and more. Plan your retirement right. Call right now for your own complimentary portfolio review and tax analysis.
Welcome back to the Asset Preservation Hour. My name is Cynthia DeFazio, and I'm joined today by Stewart Willis. He is president of Asset Preservation Wealth and Tax in Arizona, as well as Spike Spengel, radio host, TV host, and live events. So nice to have both of you. I love being on the show with you. So, Stewart, I have to ask you a question. Obviously, you are so passionate about tax planning. I know a lot of people are going to be getting their Social Security benefits, if you will. What moves can they be taking to either reduce or eliminate taxation in Social Security, and why is this so important to you?
Well, first of all, I think people underestimate how much their Social Security benefit will benefit them and how much it actually accounts for. You know, a lot of people just take it for granted, right? They just assume that they're going to go and they're going to file for their benefits. In Spike, they don't even consider the kind of implications that a plan of Social Security will have.
Right. In fact, there's a lot of folks, if you go to ssa.gov, you can just go out and find out how much you're going to get in Social Security. Maybe you've already turned it on. I think a lot of people are surprised at the fact that it's actually taxed. So if you don't mind, I'm going to throw to you, but I'm stealing your camera right now. Can you explain provisional income? What is provisional income, and has this ever been adjusted?
Yeah, I mean, that's the problem, right? So Social Security became taxable for the first time in 1983. And provisional income is what determines, you know, how taxable your Social Security is. And a lot of people don't realize that up to 85% of their benefit is taxable. And people have done their jobs. They've put away money in their 401ks, their IRAs, their thrift savings plans, their deferred compensation. And, you know, they've done what they thought is right. They maxed it out. They did their jobs. But guess what? When they retire, now they have to take it out and pay the taxes now. And I just say that, you know, we are in one of the most efficient tax windows in history.
Yeah.
And people need to understand that they're going to look back at this period of time and say, I wish I would have done something. I wish I would have taken advantage of this.
This is one of the huge takeaways that we have for anybody who is watching the program right now. The time of thinking, boy, I wish I would have. No, you've got to do it now.
Yeah.
You've got 2 years on this. I hear you talk about this every week on the radio show.
Well, including this year, we have 3, right? So we have 2023, 24, and 25. And then the Tax Cut and Jobs Act, it actually sunset. Some people call it the Trump tax cuts. It goes away because remember, it was only a temporary cut. So then it goes back to where it used to be. I'm going to pull up this graphic once again because I referred to it earlier. But if you take a look at this, we're in red right now, and it goes away and taxes go back up. So most of our clients are in that 22 to 24% bracket. Now, remember, sometimes it makes sense to pay the taxes now, sometimes it doesn't. But you need to have a plan. And Cynthia, what I'll tell you is that, you know, I think people have just way underestimated the impact of Social Security. And, you know, if you've done your job, put away all this money, this $1 million or $2 million of potential Social Security that you could get over your lifetime is something that you need to plan. You need to figure out, does it make sense to take it early or late? And I'm not saying you need to maximize the benefit by waiting till 70. Sometimes it makes sense to take it early, but make sure you're making an informed decision. Don't just listen to your friends at the water cooler, because that's where tons of mistakes are made.
That makes sense, absolutely. So I want to talk to you a little bit more in depth, if we could, about tax planning and having an efficient tax profile early. How important is that overall to retirement?
Well, yeah, I mean, a lot of times, you know, the people that are responding to, you know, our messaging are people that have built up this big tax time bomb, right? That have to, you know, unload it and figure out how to do it as quick as possible. We only have 3 years. Well, if you start early, you know, there's a tremendous ability to build tax-free wealth or tax-efficient wealth going into retirement because, look, it's during Build Back Better. It was that plan that, you know, the Democrats wanted to basically increase tax rates, you know, for higher income earners. What they were also trying to push into that was, you know, taxation on capital gains, not as sold. So what that means is, say you pay $100 grand for a house and it's become worth $200 grand. Part of that, one of the suggestions in that one of the versions of the plan actually had you have to pay that capital gain as it increased in value. So it would just be
You'd be sitting in an asset or an investment asset and having to pay tax on something you haven't sold.
Yeah, it just doesn't make any sense, right? It would create a ton of, you know, turmoil in the capital markets. It would be a problem. You know, that was far-fetched. I mean, that was one of Elizabeth Warren and Bernie Sanders' ideas. It was terrible, but, you know, it was horrible. But, you know, there was a couple things that, you know, hate to say it, but, you know, Elizabeth Warren has done a couple really neat things. And one of the things was the fiduciary rule. And the fiduciary rule that she proposed basically was trying to make more accountability on the financial advisor's perspective. And I think it's a very important thing when selecting an advisor to make sure they're a fiduciary, make sure that they're not getting commissions on sales transactions, that they're, you know, that they're not benefiting by putting you into this REIT or this, you know, this sort of, you know, product just because it pays them a big commission. And I think that's an important thing.
Right.
Only deal with the fiduciary.
Talking about this, though, and the fiduciary, it's incredibly important, and you want to find out if who you're working with or talking to is a fiduciary. But when it comes to Social Security, I want to swing us back to provisional income and those changes, and have there been changes. Can you get financial planning advice from the Social Security office?
No, look, they're not going to give you that kind of advice. They are just there to present information to you. And oftentimes people feel neglected, that they haven't had access to that kind of planning. And what people fear the most is having to go back to work after they've already retired. And if you're concerned that you may have to go back to work because your financial plan isn't in line, that you haven't cash flowed out for the next 20 years of retirement, what we're offering is a complimentary portfolio review. If you pick up the phone, give us a call at 833-652-7829. We're offering that complimentary second opinion. What we're going to do is take a look at whether tax planning will benefit you. Will it not? What kind of risk are you taking and what kind of fees are you paying? Pick up your phone, give us a call, or click on that QR code. Even easier, go to assetpreservation.com. For the first 10 callers or first 10 people to sign up, we'd be glad to help give you that second opinion at no cost.
Stewart, thank you so much. And Spike, thank you so much. To our viewers at home, that number to call, 833-652-7829. We have a lot of information to still get through here on the Asset Preservation Hour, so we're going to take a very short commercial break. But when we come back, we're going to talk about the different stages of retirement and how your investment strategies should change with each stage. We'll be right back on the Asset Preservation Hour. Stay tuned.
They've got quite an extensive resume. Wow, so many years of management. Bet that was fun. So this job requires basic knowledge of the social media and video platforms, content creation, and SEO. How proficient are you in those areas?
Going back to work after retiring is not ideal. I'm Stewart Willis with Asset Preservation Wealth and Tax. If you have amassed a nest egg, it's time for a financial advisor to help you reach your retirement goals. We are in one of the greatest tax windows in history, so it makes sense to take advantage of this tax discount while you can with your partners in retirement. All of our expert advisors, CPAs, and enrolled agents are fiduciaries that specialize in retirement planning, tax mitigation, estate planning, and more. Plan your retirement right. Call right now for your own complimentary portfolio review and tax analysis.
Welcome back to the Asset Preservation Hour. My name is Cynthia DeFazio, and I'm joined today by Stewart Willis. He is president of Asset Preservation Wealth and Tax here in Arizona, as well as Spike Spengel, radio host, TV host, live
He let me out of the
events.
radio booth today, so I thank you for that.
And I'm so happy to have you, so this is wonderful.
Me too.
Stuart, I have a question for you. Obviously, people that are entering their retirement years, they have a lot of questions about what sources of income to pull from first. What advice and guidance do you have to those folks at home?
Yeah, I think people, have to first plan out where they're going to take it from. And I think it's about, setting it up early and often and making sure you constantly revisit your plan. But you first have to understand that there are three different stages of retirement. The first stage being the accumulation stage. And in that stage, that's when you're full throttle. You want to hit the gas. Don't worry about pulling back. Don't worry about risk management. You're young. You've got 20 years of work left.
And you're using 401ks and 403bs, and you're just like, the ups and downs of the market, just keep putting it.
Aggressive S&P 500, full throttle, right? Well, then comes the asset preservation stage, which is what we named our company after. And the asset preservation stage is when you start to throttle back and you say, okay, you know what? We're getting closer. We've amassed some money. We don't want to risk it all, right? We don't want to put it all at risk because the downsides are still out there. We want to benefit, but not, risk the whole farm here. And then we have the income phase. Now that decumulation or income phase is really important because that's where you start having to decide, where do I take my income from? Where do we go? And I'll tell you, universally, that is where people are just concerned, right? Where do we take it from? And, oftentimes people have a tendency to want to take from their checking account or their savings account first. And that's kind of scary because, they do it because they don't want to have to pay taxes. But what happens is they reduce the overall amount they have in their checking and savings, but then they have this huge amount that's building tax deferred in their IRAs and 401ks. And one day, that's all you're going to have.
Right.
In
But
many
what
cases.
I'm concerned about right now, we've talked about this before. There are a lot of commercials out there now that are talking about guaranteed income products, bonuses. I can't say on things like annuities, 10%, 15%, 20%. Now, you've said before, annuities aren't necessarily bad. There's different kinds. But what about all these advertisements? Because interest rates have now gone up. I think a lot of people are chasing after returns. That makes me nervous.
Yeah, I mean, I think that there are people in our market here that are advertising bonuses and all of these things. And if it sounds too good to be true, it usually is. There's a catch. No one just gives you a bonus, right? It doesn't work like that.
True.
If it makes you feel good because someone says you get a 10% bonus, they're going to recapture it over time. There's nothing free. Right? It's gonna either be recaptured in the form of fees or it'll be in lower interest rates, but they're gonna make it up over time. So generally, we try to stay away from those things. And when you start to hear 5% guaranteed income, well, sounds great, right? 5% is a fair rate of return on a fixed product that has no risk. But oftentimes it comes at a catch because oftentimes there's rider fees and mortality and expense fees and other fees that are hidden in the background that actually eat up the underlying performance and value of the real account, not just this income value. And just remember, when you hear 5% income, now here's the thing, income is what you take. Interest is what you make. And they're making you believe that it's making 5% when that just means they're sending it to you.
So we've got to be able to read between the lines of the advertisements to see what we're really making from this?
It's, you know, I mean, some of these are, I think, a breach of fiduciary duty.
I wonder.
A lot of these are just, you know, listen, it's a stretch, right? People conflate in their head, they mix up in their head, you know, income and interest. It's not the same thing, right? And I think that you have to draw a distinction. What I care about is performance in these products. Look, we are in a great interest rate environment. We're seeing some of the best fixed products we've seen in my career. Interest rates are awesome, but you have to make sure you're taking advantage of them and not exchanging it out for this idea of income for life, because it always comes at a cost. Nothing is free. And if you're getting a bonus, you're giving something up in exchange.
What about some of the online banks? Because again, some people are trying to make up the loss of the 10 or 15 or 20% from last year. So what they're doing, you're seeing online banks that are offering 5%, 6%. We've heard a lot and talked a lot about the banks lately. Do we need to stay away from these numbers too, or does it depend?
Well, I mean, quite honestly, it sounds like, you know, the too big to fail is a good thing right now, right? I mean, that's why people were getting out of these, you know, banks. And one of the senators was pretty upset when he said, hey, you're bailing out, you know, Silicon Valley Bank because it's a bank of billionaires that contribute to a specific party, right? And are you doing the same thing for Oklahoma? And he was a senator of Oklahoma. I forgot his name. But, you know, is everyone going to get bailed out? You know, or is it only these wealthy people that make donations, right? And that's the concern, is people need to be spoken for. And look, I think that by nature, politicians want to get reelected, and they do what it takes to make their donors happy. But I think we need to draw the line, right? We need to make sure. And I just think this, don't take unnecessary risks, whether it's with your portfolio or your bank. You know, don't do that. And if you have concerns that you are taking too much risk, or maybe you were sold one of these lifetime income annuities, or maybe you're in the process of being sold it right now and you want to get a second opinion before you commit to it, we have very convenient offices in our West Valley Sun City office, in our Tempe office, in our brand new office in Scottsdale, right at the corner of Frank Lloyd Wright and Scottsdale Road. If you give us a call, we'd be glad to give you a second opinion, but you have to take action. Give us a call at 833-652-7829. Go to assetpreservation.com, or even easier, click on that QR code. It'll take you to our website where you can sign up for your complimentary portfolio review. But you have to take action. Give us a call.
Stewart, thank you so much. Spike, thank you so much. To our viewers at home, most specifically, thank you for spending time with us today on the Asset Preservation Hour. That number, once again, 833-652-7829. Or grab your smartphone, go ahead, click on the QR code at the bottom corner of your screen to be taken right to Stewart's landing page. Be safe, be happy, be blessed. We'll see you back 1 week from today on the Asset Preservation Hour with Stewart Willis.